And having that knowledge, I think it's just that sense of empowerment that you get. And that's, I think, the biggest, even bigger than number changes in financials, it's giving the business owner that sense of empowerment, that sense of knowledge, because when you're informed, like you said, when you're feeling in control of your business, your approach to how you're operating is so much more, it's just better. It's so much more efficient. You're able to make better decisions. You're able to have a clear goal and know where you're going. You're coming back to me with these like incredibly insightful and deep questions that I'm like, is this the same person I spoke to 3 months ago that didn't know? And now they're asking me like, what's my gross margin, or what's my cost of acquisition, or how do we, all these, insightful questions.
Hello, beautiful people. Welcome to the next episode of the Beauty and the Brand podcast. We're here with Anthea Austin. She's the founder and CPA at Clear Margin Consulting. It is a CFO accounting and bookkeeping firm. She has been a fractional CFO now for over 3 years in my business, as well as a financial advisor in our beauty brand mastermind. So I've had the pleasure of working with Anthea for a few years now, and she has been one of the most instrumental people in my business, and has transformed my love for numbers and finances. So welcome, Anthea. So
thanks, Aggie. I'm so excited to be here.
I just love like everything that like you just give so much clarity, your gift of clarity and your gift of like peace of mind.
Oh, that's so good. That's amazing to hear. That's definitely what I aim for. I think as a business owner myself, I just look at numbers in my business, and the way I just try and provide that same outlook to business owners who maybe don't have the same background with numbers that I do. But yeah,
absolutely. I always say, like, after every call with Anthea, I'm like, I just feel like a weight has been like lifted, just knowing like what's happening, just having clarity. I just love, it's funny because it's like financials, and a lot of times people feel, they feel anxious or nervous about talking about financials, but I always find that they make me feel much more clear and just kind of confident of where I'm at and what's happening.
Absolutely, yes.
Tell us give us a little bit of background about your business, and like, who do you typically work with, and just a little bit of background around you.
Yeah, of course. So I started the business back in 2018, and I started it because I used to work in financial FP&A, which is financial planning and analysis in large companies. All companies have this big like CFO planning, budgeting, function in the business. And I read this book, Simon Sinek, Find Your Why, which I loved. I always talk about his books and his teaching. And it was all about finding the parts of your job or the parts of your life that you really love and that really light you up. And I realized what I love doing, at least when it came to my role, was when I would actually sit down with department heads and I would talk through their budgets and I would plan for the year. But that was a pretty small part of my role. And it took me a bit of time to kind of find my way in small business and find that, this could be a larger part of my role. This could be, my whole job. And that's kind of how Clear Margin Consulting was born, really. It was just kind of finding more opportunities to do what I love. So we started back in 2018. At that time, it was just me and really a lot of doing bookkeeping and a lot of tax. We expanded in 2022 when my son was born. I needed to hire. And which is a crazy transition as well, because I didn't kind of foresee the business growing to this level, but now it is. So we've continued to expand the team, continue to take on additional clients. I really like working with a variety of clients. So we work with clients across the retail space, across service-based businesses, even, medical and health businesses. Quite a broad aspect, gives us a lot of variety in the type of work that we do, keeps things interesting. And there's some different comparisons I think we can apply to, working with different businesses, learnings from other industries, how we can apply them to the businesses that we work with.
Yeah, absolutely. And, one of the things I appreciate is that I actually love that you're growing your business, because it just means that you're growth oriented. and that you're sort of constantly evolving. There's something that's living and breathing and growing, which I think is something that you ultimately then like bring to, where whatever you're doing, whether it be, our one-on-ones or in our advisory, or there's always something new like that we're often building, like, we'll say like, oh, I have this idea for this, like, how do we calculate this thing? And then you literally magically create this calculator in like 5 minutes. And you're like, this is how we can calculate this. And it just turns into like a tool. So it's such a treat.
It is. It's so true. I think as you grow, you work with different businesses. And I still, even when I get on calls with potential clients, I still get that like, oh my gosh, this business is amazing. This person is amazing. I would love to work with them, and still having that feeling. And that's, I don't know, it's just so exciting to be brought into and have that trust in a new business. Mm-hmm. And you do, I mean, you come across things all the time, and I come across different questions from clients, and I'll be like, oh, I haven't thought of that before. Let's kind of like work through it. Let's digest it a little bit. And it's such a challenge, and it's just what I love doing, which sounds so crazy because I know for a lot of people, money is very scary, and it can be for me as well. But in the end, it's just like a welcome challenge, and I love it.
Absolutely. So obviously you've been instrumental, in keeping companies financially healthy. Can you share a story maybe of when you intervened to help turn a company's, direction or growth around?
Yeah, and I think what you had said at the beginning of the recording about having a mindset change when it comes to money. And I think that's probably the key change that I see in the business owners that I work with. It's having that initial call with them when they're feeling overwhelmed, they're feeling stressed, isolated, really stuck, sometimes even like feeling stupid when it comes to money. And sometimes the first conversation they have about finances is with me. And I think that's like such a privileged position to be in. It's so amazing that someone's willing to come on a call and kind of open up about what's going on, and going from that to then, okay, let's look at your finances. Let's look at how the business is operating. Let's get some of these numbers that we're kind of almost imagining or building up in our head as business owners. Let's get the factual data behind them and see actually what's going on. And having that knowledge, I think it's just that sense of empowerment that you get. And that's, I think, the biggest, even bigger than number changes in financials. It's giving the business owner that sense of empowerment, that sense of knowledge, because when you're informed, like you said, when you're feeling in control of your business, your approach to how you're operating is so much more, it's just better. It's so much more efficient. You're able to make better decisions. You're able to have a clear goal and know where you're going. You're coming back to me with these like incredibly insightful and deep questions that I'm like, is this the same person I spoke to 3 months ago that didn't know? And now they're asking me like, what's my gross margin, or what's my cost of acquisition, or how do we, all these, insightful questions. And that, I think, leads to that kind of behavioral change and spending based on a plan, and not kind of giving into emotions, or not giving into, what's the word I'm looking for? Whims, I suppose, whims of the landscape and business and of the economy, and having that confidence to build something that is in line with kind of your goals as a business owner, but also with what the business needs and what the business wants as it continues to grow.
Absolutely. Yeah. Not giving into the whims and the emotions of what you think might be happening. Numbers are numbers. There's no emotion around it. It's just facts.
Exactly. Yeah. That's so true. And it takes us a little while to get there, because there is a lot of, there's everyone's money story is really different. And
that's
how
so true.
You've experienced money as a child, how you've grown up, how your parents dealt with money, how your parents talked about money, how it was talked in your household, all have these big impacts of you as an adult and as a business owner as well. So working through that a little bit and having that sense of fact behind you, even though, I have clients that are, 6-7 figure, multi-7 figure businesses, and they'll still come to me and be like, I can save money on my Canva subscription from if I pay it like $20 instead of 25, and I'll be like, this is not something that you should be thinking about right now. That's not where it's like, this is your like, cost saving. Like, this is you building up stories in your head. The facts of the business are, this is your year-to-date numbers. This is where we're going to land. This is a comparison against last year. And these are all really, really good. Not saying that you can ignore things like that, but not to get hung up on like the small details and the small, oh my gosh, we need to, we're in a scarcity mindset. We really need to pull funds in, when the reality is actually we can afford to invest a little bit more in the business this year.
I love that. And that's always such a great news when there's like room to invest more.
Yes.
What you touched on something. You mentioned like, people have their money stories, and people have their beliefs that they grew up with as children around money. What were those for you? I'm just curious.
I'm definitely more of a saver than a spender. I think I grew up in a household where we had very comfortable lives. We had a lot, what we needed, and we were taken care of. But there was still that kind of stress about money in the background, and that stress of having a new bill come in, and working out how we were going to afford it as a household. And I think I still feel that today. And to me, very important in my money goals is having an emergency fund and not operating off debt. So those are kind of my big priorities when I'm working through my business. I always want to make sure I have enough cash available, and I never want to kind of go into debt. And that's when, my partner and I, we talk about our finance, our personal finance and our personal finance goals. And those are the top two for me. That's always where I feel comfortable, even at the risk of having taking home less of a salary. If it means I can feel more comfortable with the cash position of my business, then that's kind of what I'll do. Whereas a lot of other people and a lot of business owners I work with don't have that, mentality, where I'll always promote, we need to, pay back debt. We need to focus on that. But other business owners, they think that what's important to them is, making sure that they're getting the value of the effort they're putting into the business, and making sure that they're paying themselves a comfortable salary, and making sure that they're investing in the business to grow it and continue to expand it. That's where their goals are. And so we often have to kind of like balance that. And it's good. It's healthy to have that natural, I suppose, discussion between the CEO and the CFO, because the CFO is always going to believe what I believe is that we should pay back debt. And the CEO is always going to be, I'm a dreamer. We should invest in this, and we're doing this new thing, Anthea, like jump on board. And I'm pulling back the rails a little bit, being okay, but 6 months ago when we set the budget, this was our goals. So are these no longer our goals? Because that's what you want to do here is completely in, opposite to what we had agreed on. And so coming back to that original, yes, that was the original plan.
Yes.
Let's stick to the goals. I feel like I went down a bit of a rabbit hole there, but hopefully I answered your question.
I love that rabbit hole, and it kind of sparked another question that I think is often there's so much shame and heaviness around it. But there's so many, and also different perspectives on this. But debt, is that something that you, as a financial advisor, and working with many different businesses, is that something that you see, regularly? And what do you advise businesses to do, when they do have debt? Like, what does that look like?
Yeah, it's such a good question, because people treat debt really differently. My philosophy on debt is always to very much limit, like I'm never going to advise someone to take out debt to do something. I never would. I'd never promote that or, be on board with that strategy. But it happens anyway. Like at the end of the day, it's not my business, it's their business. So I can talk about the risks involved in it. But if at the end of the day, that's their decision and that's what they decide to do, then okay, that's fine. Let's create the strategy to work on paying back that debt. So I think that's the first thing. I wouldn't ever tell someone to go into debt. I would always promote trying to raise that cash flow within the business, or even raise that cash flow outside of the business, whatever that looks like as, a household. And the second part, what was the second part of your question?
I think, yeah, just like what you advise, founders are around debt, and then also, how frequent do you see debt in businesses that you work with?
Yeah, quite a lot. Quite a lot of businesses take on debt. And I think in the operational life cycle of a business, that's pretty natural because we do need to front end purchases. We need to be ready for, the holiday season, and we need to, or the spring season, and we need to make purchases before we're actually getting ready to sell in the business. So it's quite natural to have that fluctuation. And so it's very common. And I think when there's historically good cash flow and historical profitable businesses, and we can reliably predict the uptick in sales over, the busy period, then we can have a very strong cash flow plan about, okay, yes, we're going to rely on this, 50,000 line of credit to make this investment into inventory. And then because our prior year sales were, 300,000, we're going to be reliably able to pay that back at the end of the year. And that's going to cash flow us into next year. So having a plan around that debt strategy and how that cash is going to flow through the company is definitely a high priority for me. What I see businesses get into trouble with is when they're not kind of operating in that life cycle, when they're having issues outside of that's, I can't afford, X, Y, and Z. I'm going to take on debt to sustain me, but I don't have a solid plan for how that debt is going to be repaid and how it's going to flow through the business. And that's when we kind of get into trouble. So even though I say, I would never tell someone to take on to debt, I can definitely understand the circumstances that would lead to that. And as long as there's a strong plan in place to be able to manage it, then it does, and I see it work out with businesses all the time. And I also see it not work out with businesses. So that's kind of where my thoughts are with it.
That's such a tricky spot to be in too.
Yeah. And I'm the CFO. Like I can talk about the financials. I can talk about cost of goods sold, operational margin. We can predict sales based on previous years, but I'm not the CEO. And sometimes the CEO, all the time, probably the CEO has a better vision, has a clearer vision, a better idea of how the season's going to go. So I'm taking that advice as another data input, and I'm, analyzing that in my model. And so
interesting.
Sometimes the business owner has it right, and they're like, we've got X, Y, and Z deals lined up. We've got so much more interest in our socials or in our marketing spend. We're getting so much more engagement. We're going to have the best season. And so, then we can justify some of the financial conversations, I suppose, that we're having around that.
So interesting. I love that. Yes, it's numbers and data, but it's also, there's a nuance to it as well in terms of the decisions around it. Right?
Yeah, absolutely. And it's so much a relationship conversation because I can go away and I can come up with a budget for your business and I can say, oh, these are, this is your budget. Here you go. Bye. But it's not about that because you need the business owner brought in along the way, and you need their experience and their knowledge. That's like a data point for me as well. And I'm not going to come up with a number and be like, here's your number. I'm going to say, okay, this is where we got to based on our conversations. How does that feel? And how does that sit with you? Because if it's too ambitious, they're not going to be motivated to get there. And it's just going to fall flat. And if it's not ambitious enough, then they're not going to really grow and expand. So I always say, at the end of our budget calls, how are you feeling? How does that fit with you? Do you feel like this feels good? Do you feel like this is a healthy stretch of growth versus kind of being a little bit scared? And that's kind of where we want to sit. And if I can get that impression from the business owner, then I know that we've done the right job, and I know that we're on a good track to achieve it.
Okay, amazing. So tell me a little bit more about what are some of those common, I guess, financial pitfalls that you see particularly product businesses, beauty brands falling into? And how do you recommend they navigate those challenges?
The most common with beauty brands is not understanding or not knowing the cost of goods sold versus operational cost differences early enough in their business. And so cost of goods sold versus operational costs, a lot of people call these, direct costs versus indirect costs, or fixed versus variable expenses. I prefer to go with cost of goods sold and operational expenses. So the cost of goods sold, to just kind of break that down a little bit, that is the cost of producing the product that ends up in the hand of the customer. That's your ingredients that go into formulas. That's the bottle that it comes in. That's the labels on the bottle. If it comes in a box, if it has, other embellishments, anything that the customer is getting in their hand, that's your cost of goods sold. So understanding exactly for every single product, how much does that cost the business to make? And how much, what's the pricing on that product? And just understanding that difference. That's the biggest thing that I see business owners not understanding early enough and not focusing on early enough.
So if you don't understand it early enough, what happens? Like, where does the problem come in?
Yeah, that's a good question. So if you don't understand it early enough, the biggest problem is with pricing. It's either underpricing or, it could be overpricing and not reflecting all of those costs in the pricing strategy of the business. So where you're pricing your product makes a difference between how your product is kind of positioned in the market. If you have a fairly low cost of goods sold, then you have enough room in your budget for advertising, for promotional, for operational expenses. And that's where you can afford to really invest, because you've got enough margin in your product that you can do these big, like splashy events and advertising initiatives, and you can really invest there. What I see businesses doing is that they're pricing their cost of goods sold margin is too high and they don't have enough left for operational expenses, but they're spending like they do. They have a slow margin, but then they're overspending in operational. So having it worked out really early on and understanding, how many units of products do I need to sell to be able to generate enough gross margin that I'm achieving, my operational and my business goals. And that also comes into just, I talked about underpricing, but also revisiting costs as cost rises. And we've seen this insane over the last few years. Just revisiting, because products pricing is changing all the time from suppliers. So revisiting it and making sure that your margins are still staying strong, as well as being really thoughtful around promotions and around discounts, because these are going to affect your margins as well.
Absolutely.
So those are probably the most, the key place in where to start. And I do have a pricing, maybe I can send you the link to our pricing cost of goods sold spreadsheet to go through, just to kind of see how it works and see how we can input different variables and come up with that.
Yeah, we can definitely share that. In terms of like that, cost of goods sold, one thing I noticed, like, for example, a lot of our founders might be doing events or shows or like trade shows or craft shows or markets, and they don't count in their personal labor costs. So how does that play into cost of goods sold? It would only play in if they're actually making their own product, yes?
Yeah, the labor in cost of goods sold is a really important consideration. And I suppose it's different from the operational labor. So you can have kind of two types of labor. The labor that we want to consider in cost of goods sold is the labor that's involved in making the product and putting the pieces together directly. Like, I am mixing ingredients, I am putting formula into containers, I'm packaging up. Like, these are labor that we would consider. Other overhead labor might be selling at markets. That would be more of like a selling and marketing expense, or even the market costs in themselves would be more operational expense as well. So we have to kind of consider that as well when we're looking at pricing, because we want to know that if I'm selling directly on my website and I'm reaching customers in that way, you're going to have lower need for operational expenses than if you're, physically out at locations and you're traveling and you're, visiting stores where your product is sourced and promoting it that way.
Absolutely. And I think one kind of hiccup or mistake I see founders make early on with the pricing and cost of goods sold is that they aren't anticipating certain costs. So like they're not anticipating that they might do wholesale at some point, or they're not anticipating that they might need to spend on advertising, or that they might build a team. And so how do you factor that in? I guess, I know that's not necessarily cost of goods sold, but it is an important piece to consider when pricing your product.
I mean, it is cost of goods sold because if we're trying to work out a percentage of the product costs versus the sales price, if the sales price is changing, then we need to kind of calculate a different margin. So we would be looking at, okay, what percentage of your sales is likely to go down that retail route? And so we can calculate our expected cost of goods sold based on retail sales. And then how much percentage of your sales do you expect to go to wholesale? And again, so we calculate cost of goods sold, and even for custom items like that. So we can still build all of that into a budget to get a kind of combined, I suppose, cost of goods sold versus revenue for the whole business. And that affects what's left as well, because you might have a really great margin when it comes to retail, and then not a really terrible margin when it comes to wholesale. So the business cost of goods sold accumulated or totaled, I suppose, might be different to that on an individual level, like it quite often is. And so that ties into how much we can afford to spend on labor and on hiring a team and on attending different things in order to meet the business's profit goals, the owner's salary, as well as making sure we're still paying back that debt if there is debt, or at least putting money away towards sales taxes and business tax, corporate tax.
Yeah, and just to reiterate, I do think like often what I see is that maybe some founders aren't accounting for strategies that they may get into later. So they may not be launching with the strategy of being in let's just use this as an example, wholesale. So they'll be like, oh, well, my margins are great, because I'm just doing DTC, but they may not be accounting for the fact that they might do wholesale in 3 years or 5 years. And then they have to kind of really increase that pricing. Like I know of this one brand that I remember this one brand is actually not a beauty brand. It's a linens company that originally was like a DTC only linens company, but then they eventually got into wholesale. They ultimately opened up brick and mortar locations. So they, I'm on their email list. So I ended up seeing like all of these like very large spikes in like, hey, our prices are increasing, and like year after year, and like, you can account for that really early on, and maybe you don't use that extra wiggle room for wholesale for 5 years. Maybe you use it for something different, but at least you have the wiggle room built in from the beginning.
That's absolutely so true, and such a good point. And having enough space having as much space as possible in your margin is always going to be the preferred option. Coming in at 50% when it's direct to customers, it just doesn't leave you a lot of room, because wholesalers want to be selling, they want a 50% margin themselves. So if you have that, then they're not going to be you're not making any money from wholesale, basically. So that's such an important consideration really, really early on.
Yeah, absolutely. And just making sure actually, let me ask you, so then on the flip side, do you notice in the product businesses that you work with that, do some of them do volume play successfully? Because there's, from my perspective, with small businesses that are self-funding, I believe it's a lot easier to do more of a premium play, luxury play, less inventory or less SKUs, versus a volume play. A volume play, you're counting on volume, like a huge audience that you may not have. And if you're pricing your products really low and the margins are low, then you're doing a volume play. So what's your take on that? Do you have any experience to share about that?
I think that definitely makes sense from a financial point of view, because when you're small and you're just starting out, you just don't have the capacity to be launching like 50 different SKUs. So focusing on a few kind of key champion products makes a lot of sense, and focusing on marketing positioning and increase margin, like that really luxury positioning really early on. I almost feel like that's the only way you can really go in today's market, because the businesses that are at the lower end, pricing wise, they're all able to just generate such a low cost of goods sold through scale.
Yes,
they have warehouses, they have, their cost of goods margin is like insanely low. It's like 10% or 13% or something. And for most businesses, like small business, when you're starting out, you just can't achieve that.
Right.
You could potentially have a goal of having a higher margin now, like having the product cost more, but with a goal to scale to work on lowering that cost of goods sold over time. But again, that's a really hard transition to make. I think what you're talking about makes a lot more sense in terms of the landscape, just really focusing on that brand awareness, that brand loyalty, getting those like champion customers in really early on, and scaling through that. That's where we see the majority of businesses taking on in terms of a strategy.
Yes, absolutely. Although, if you have the financial backing, maybe if you have seed funding or VC funding, or you happen to have a huge audience already built in, then it would be much easier to do like a volume play where you're selling at a more accessible price point, because you have just more people to sell that to, which, you're making up the lower margins on the volume.
Yeah, exactly. Those are all, important considerations as well.
So, tell me, how do you approach financial forecasting for a beauty brand, and what factors do you think are most overlooked by founders in forecasting?
Yeah, okay, good question. When I start working with a business owner, I always like to start with what are their goals? Just no other kind of leads or ideas, but just what are your goals for your business? Why are you doing what you're doing, and what do you want to achieve out of it? And that's kind of like throwing spaghetti at the wall and kind of where we're going to land up. I don't know, it takes a bit to just let's come up with somewhere. There's something in the back of your mind that you want to do with your business. Let's just get there, even if it's just completely random and, out of nowhere. So that's how I usually like to start. And sometimes I can get some really insightful answers. I can get some, we really want to sell the business. I really want to get it to a level when it's really ready to sell. Or this is my ideal revenue number. I want to touch this many people's lives with my product. This is I just want to expand. I want as many people as possible to have access to this amazing thing that I'm creating. There's multiple, or, as an owner salary, this is how much I want to take. There's so many different answers that I can get to that question, but that's usually the starting point, and that can give me kind of somewhere to go. So from there, we're just going to fill in the detail of bringing that vision alive, no matter how unrealistic it is at the start. We're just putting together a plan. It might be, maybe they just started their business and it's doing, 6 figures, and the goal is I want to make 7 figures in net income. And so we're just pulling in the data to be able to match that picture. And we're like, okay, so this is the one-time eventual dream goal of the business, and this is what you did last year. And then we're just filling in the middle pieces of that. So we're probably not going from like 100,000 in revenue to 5 million in revenue in the space of a year, but what feels like an achievable next step in getting towards there, and working through those previous calculations with cost of goods sold margin and operational expenses. Sorry, I'm not sure if you can hear that. That's my son knocking at the door. Working from home parents. He's with my husband, but he's gotten away.
He knows where mommy is.
Yeah.
Oh my gosh, I love that. Okay, so let's see. We were Hector. Kevin, can we just trim this part a little bit? Where were we? You just said, what did you just say? Because I have a follow-up question.
I was just talking about that, throwing spaghetti at the air, thinking of the big picture goals, and then filling in the details and the gaps.
Yes. Okay, so have you ever had a situation where, like, okay, you make a projection and then the business overshot by like 5 times or 10 times?
Oh, interesting. It's not common. I definitely have situations where business owners, it's interesting because when we kind of come up with these budgets and these goals, typically probably 90% of the time, they're either kind of achieving like that healthy 20-30% growth that we set out to achieve, or they're achieving they're achieving the budget that we set down, or they're exceeding the budget that we set down. That's typically where we sit. So I don't often see businesses. I'm even trying to think of an example. I just had a case. This was not in the beauty industry, but a business owner that did just go from like 500,000 in revenue, I think, to over $1 million. So they grew 50%. And there were really specific situations that kind of led to that growth, which I just don't think is repeatable for businesses outside of that specific situation. Right. Yeah, in answer to your strategy, in your question, I don't think we just don't see that, because when we're planning for a certain level of revenue, all the steps that we're taking are based on achieving that. Like what we're ordering, how many wholesalers, what our customer or direct to customer sales will look like, what customized orders we're going to take on. So even if you were to get an inquiry from a business that's like, an insanely big order that's going to take your revenue, increase your revenue by like $500,000, you just don't have the internal systems and the internal setups ready to be able to take that on.
For sure.
So that's why I think always forecasting like a healthy level of growth is really important.
But then would you then, like, conversely, using that thought process, would you then, let's say you have a business that says, okay, I want to 5X this, just as an example. Could you then, in theory, using that example of like, well, if you create the goal and then you fill in the middle, could you set the goal to be 5X, fill in the middle to hit the 5X? Like, could that be the process?
Yeah, and I think that's a strategy that a lot of businesses using. I just think it's a very high risk strategy, because when we're talking about that investment and that debt, the level of investment and growth needed and just the operational standpoint is so extreme.
The team members.
Yeah, the team members, the setup, it's if we're talking about, in like January, February, March, we're planning our purchases for the Christmas period. If we're planning 5 times growth over Christmas, over the holidays, then we're also planning 5 times that amount of spending in that February, March season. Right. And so unless the business has enough cash flow to be able to support that, or external investments or like funding, like you said, they can set up their business in a way to scale at that level, but typically businesses don't. And so if we're relying on typical debt financing, that's a really risky move to take, kind of betting it all on that we are going to see that sale increase at the end of the year.
Absolutely. So then, okay, have you ever had a situation where, going back to, taking that debt on, or that risky business, like a client that's taken on like a very risky financial decision and then it did pay off?
I've had situations where it's probably not achieved like the level of success that it wanted to, but it's still far exceeded, the prior year expectation. So you've kind of seen a lot of growth, more growth than the business would have typically done without those early moves, but maybe not to the like 5x level that we were kind of expecting.
Right. Okay, got it. Yeah, it was actually really interesting that something that you shared in our mastermind session a couple of weeks ago around year-over-year growth. And, what we see in the media is, a lot of like, companies that are overnight successes, companies that have had stratospheric growth, 1,000% growth, or went to 1 million, and they just launched the same year. Okay, so I have a two-part question here. Number one, what is just so everyone who's listening to this can know, what is that sort of average growth year over year for business?
Yeah, average growth kind of top level. I'm always around that kind of 20 to 30% is what I would look for. Anything kind of above that, I would really start to question what's different about this year over last year. Like, what are we doing? And I almost need like the business owner, the CEO to just kind of justify that to me and to like sell it to me. I'm like, okay, you need to convince me that you're going to achieve 50% growth. And so that's always an interesting discussion. Yeah.
So typical is like 20 to 30%.
Yeah, exactly. And that's based on, word of mouth, expanding marketing efforts. If you've seen a certain, last year 100 people had your product, this year 120 people, and we're going to see that kind of grow and grow. But it's just going to take time. And we all know that from working in our businesses as well. Like the first year in business, when you have your product, you're just like, pushing your head against a wall, being like,
yes,
buy this.
Yes, exactly.
And then the second year you have like hundreds of customers who know you and have bought it and have tried it. You've had conversations with them. You've answered questions in forums. You've been there, and they're the ones that are out there being like, buy this product. Like, you don't have to be as loud anymore because you've got it a little bit. And so that's kind of, if you think about it always in terms of that, you're talking about going from 500 people know and love your product to like 1 million people going to love your product in the space of a year. It seems like too much in terms of what we just typically see.
Absolutely. It's good to have like a baseline, because I do think there's a lot of, I wouldn't say false media. I mean, there's always a lone case here and there, but it's not typical. Have you ever had a business that went from 0 to 1 million in a year?
I don't think I have. No, I haven't seen that level of growth.
Oh, interesting. Yeah. It's so interesting because there's so much like there's so many claims that say that out there.
Yeah. And I think if you, like you said, if you had those pieces, like if you had a really good audience, a really good following, if you had that investment, if you had maybe the right team around you to support like someone who's done it before and who's like, this, you need 3 people here, you need a warehouse here, you need this is your shipping system. If you had someone who's like done it all before and you had funding and you had the audience, then it's absolutely possible. But most of us do not have that luxury. They're just us like standing on the corner saying, please buy this.
Exactly. You just starting from scratch, and oftentimes it's the first business. So yeah, I hear you. And for our beauty brand founders or any founders who are listening, what's that one financial habit they should start today that they'll thank themselves for in 5 years?
I think it's talking about money and it's talking about finances, and it doesn't matter who it's with, even if it's just to yourself. It could be your partner, it could be a friend. Just talk about money, start to understand it, start to look at your finances and understand how money flows through your business, how it comes in, how it goes out to products, how it goes out to operational expenses, and just have an idea of how this picture is all coming together and this picture is all working. If we think about businesses that are at that, if your goal as a business is to get to that 7-figure level, which I think most of us are, then we know that businesses in that situation, they have their finances figured out. They have it nailed down. They have a strong budget. They have a strong monthly process in terms of they're looking at their revenue. They can tell you their 3-month average. They can tell you their cost of goods sold, their standard operating expenses. So if that's the goal of getting there, then those are the pieces that you need to fill in today to be able to grow and to be able to change it. But if that feels like too big of a step, just start talking about money with somebody. Just start talking out loud, because once we have that mindset change, and money isn't just as scary anymore. I mean, I feel like it's always going to be a little bit scary, but it's maybe not as scary. Then we can start to enact some behavior change around that, and that's where the real growth and the real potential comes from.
And is there like a book that, like a favorite book that you recommend for someone who, they know they need to kind of work on their money mindset, or, maybe it's a more strategic financial book that you recommend?
I really like The Psychology of Money. I'm blanking on the author's name right now. But that really goes into a lot of what I was talking about in terms of the money stories and people's approaches to money, and how, I guess how money is viewed by different people. Even different people of the exact same demographics can have a completely different story around money. So that's probably one I'd recommend. That's one of my favorites.
Yeah, there's a book called by Jen Sincero, You Are Badass at Making Money. I don't know if you've heard of that one, but that's one that I recommend. I read that one a long while ago, and it has a lot of nice little like exercises to kind of rework your money story. And I know a lot of my clients have also loved that book too.
Oh, I love that. Awesome. I'll definitely have to check that out. I love a good money book.
Yes. I think that's a really good one, especially around like money stories, money mindset, like, especially because that's really at the heart of, you're right. Like that's really at the heart of money strategy, is like being able to say like, I'm going to consistently talk about money with somebody or with myself, but like, I'm just going to keep, be comfortable talking about it. And the more you talk about it, the more comfortable you become.
Yes. Yeah, exactly. And it's something that I see, as I said, I see it all the time with almost every client comes to me and they say, I am the worst with money, Anthea. You have never seen someone as bad as I am with money. 90% of my clients start off with that. And I'm like, I promise you, you are not the worst with money. Like everybody tells me this. Everybody tells me this. It is never true. You are amazing. And the disconnect we can have between I've built a $500,000 business. I've got this team to support me. I've got this product, that's out there. And then also, but I'm terrible at money. I just can't. This is not true. These two things are not true. I promise you, they're not true.
That's such a good point.
Sometimes it's just having that little cheerleader say,
yes,
you're doing amazing.
You're doing great.
You're incredible.
Whenever you say that, I'm just like, thank you. I just need to hear it. It's funny.
We get in our head just as learners.
And I remember before I started working with you, I was just like I had a manual P&L. I was tracking every single little thing in categories manually. Like that's what I was sending to my accountant. I don't even remember. I mean, I was like really like, it was all manual. It's amazing. Are there any tools that you recommend people use in the beginning if they're doing it themselves, or, if they want to start tracking their finances?
Tools are a difficult one. I'm really looking forward to what we're going to be seeing in the future in this space with AI and tech advancements. I think we haven't quite gotten there in the finance business world yet in terms of AI, but it's coming for us and it's very exciting. So it's always really tricky to recommend tools, because the tools I recommend are things that you have to learn and you have to work through. So I'm not going to recommend any, but I'm just going to say, just do something, just start somewhere, even if it is a manual spreadsheet. I think that's fine. If that's what makes sense, download your bank statement every month and pull your expenses, your bank transactions into how much came into my business and how much came out of my business. Even start there. Like, that's amazing. That's so incredible to be looking at finances and just know that that's what's happening. That's how cash flow is moving in the business.
Go ahead.
We use QuickBooks and Xero, and we have, like receipt automation and, different tools that we use to work with our clients. And then we'll use more advanced like AI for more like specific task analysis when we have to look for differences or we have to, analyze a bunch of data. But I think that it's really too early for business owners to be adopting some of these things. I think in the beginning, just look through your bank statement, just start somewhere.
Absolutely. I think that was doing it manually was actually a really nice treat, because it kind of forced me to look at every single expense that I had, every single thing that was coming in. And it was nice to be able to like constantly, like, I would try to check it I would try to update it like every month, just to understand like what's coming in, what's going out, do these expenses make sense? And I think it's a lot easier, obviously, when it's a small business that's just started out, it's a lot easier to track all that stuff manually. And then eventually, or in the beginning, you can use like QuickBooks, which I know is something that, you use. One thing that I love that when we started working together, one of the first things you said to do is to create an account, like an email account that was like accounting at XYZ company, that where you would send, like I would send all my receipts, take photos of all my receipts and send it to that email. And even if you don't have an Anthea on the other end and her team, like checking those accounts and, checking and applying all those receipts, you could still have that system. And then you be the person once a month going in there, and putting those receipts in, right?
Absolutely. Yeah. That's one of the things I always talk to business owners about. I always talk about what's your process for receipt management? And sometimes they will have that set up and oftentimes they won't. And it's one of the early things that we recommend. It doesn't have to be a fancy, like at your domain, like accounting at, your domain. It can just be like, a lot of our clients will just have like my business finances at gmail.com or whatever it is, just somewhere where it's all separate. And it's really that catch-all for sending financial receipts, capturing even monthly ones that come through. You can use that email as your billing email. You can send it to people, if vendors or suppliers, if they want to send invoices, this is the email that they're going to use. And it just keeps everything in one place. When you get to the end of the month, then you do need to go through and look at some transactions and fill in some information, then everything's all there.
Absolutely. I think I wanted to touch on too, like, what are sort of the 3 things that, when someone's starting a new business, right? They, I'm still seeing this with founders who, have been in business, longer, where they're still using their personal account, to pay for their business and or vice versa. And I think that's one of the sort of baseline things that you want to implement and get in the habit of doing, right? Where it's like you want to make sure you're separating those out and always paying for everything with your business account, with your business credit card.
Yes.
Because that can get you in a big pickle with the IRS.
Yeah. That's such a good point. Yeah, it's starting really basic, just at the very beginning. I would say the first things are deciding on your business structure, and that comes from those goals as well. If you're planning to sell the business at some point, then set up the corporation, speak to a lawyer, set up the ownership structure, who's going to be the shareholders, get all those pieces out of the way before you're even kind of making your first sale. That's the very first thing. Through that process, if you do incorporate, then you will end up setting separate bank accounts up. And but even if you don't, even if you are operating as a sole proprietor, just having a separate account that's designated as your business account and a separate credit card, if you're using a credit card that's designated as your business credit card. Those two pieces, I mean, are so fundamentally important to how the rest of the business is going to operate. You definitely don't want to get to a situation when you're 4 or 5 years down the track and you're like, oh, well, I thought we were incorporated, but actually we didn't do it properly. So we've, been running as a sole proprietorship for 4 years, but didn't notice. Or same with, separating out business finances. It's crazy how you can miss deductions if you're got personal and business expenses mixed in there.
And then you have to start sending receipts back and forth to yourself, which is like just annoying, and you don't want to have to deal with that. You might as well just like set it up the right way right at the beginning.
Exactly. And then the third thing would be just having that process around, probably it would be the receipt management aspect that we talked about, just having that process of recording receipts, recording purchases every month so that you have that documentation ready. If you do nothing else, if you do those 3 things and your cash flow is still looking okay, despite not, putting much time into how the business finances are going, that can probably sustain you for a little bit until you're ready to kind of start doing your own bookkeeping or work with an external bookkeeper.
Yeah, absolutely. Okay, so last question that I have for you here is, do you see any big financial opportunities for small businesses in the next couple of years or next few years?
Oh, interesting question. Big opportunity. I mean, there's always opportunities for business owners. I think you had mentioned that the other day about oversupply in the market, and it's really such a mindset game operating a business, because when you think there's opportunity and abundance, then there is. And if you think the opposite, then there isn't. And I have these conversations with business owners who have those, they're on the call and they're like, oh, we just can't get it. There's so many more suppliers out there. We just can't get the sales that we want to do, X, Y, and Z reasons. And then I have the other ones on the other end who are like, oh, we're, there's this new industry, this new client that we're working with that's going to refer us, and it's all opportunity and it's all happening and it's all growth. And yes, you could argue that, okay, well, one business is doing pretty well despite some challenges, and the other business is maybe not doing so well despite the challenges. And so obviously they're going to have different mindsets. But I just see it time and time again that it's the person with that outlook and that mentality, they just have it and they outperform the other options. So I don't know if it's cause and causation or correlation, but that's the impact that I see. So I think just remembering that there is always opportunity, even in the worst economic times, there are still businesses that are thriving.
Yes.
So,
and I think it's really interesting because I just had a conversation earlier with a business founder who has been in business for 15 years and has gone through so many trials and tribulations, from, the recession in 2008 to COVID to, all these other changes and ups and downs, so many times where they might have considered to throw in the towel and then they didn't, and they got through it. And now they're on this huge growth trajectory, like in the thousands of percents growth trajectory. And, I believe this, and I say this, which is that you will win if you just don't quit. It sounds so simple, but there's so much nuance to it, because there's so many things that could trip us up and stop us and make us feel, well, this is the end, and it's not the end if you just keep going, unless you don't feel called to keep going and you truly don't want to anymore. That's a different story. But it's true. If you will win if you don't stop. Eventually you will win if you do keep going.
That's so true. And that's the point as business owners, I think, even coming into a business in the first place, a lot of business owners, a lot of people don't start businesses even though they could. the people who start, they build a business. Like, you just have to start. It's the same mentality. You just have to keep going and you'll do it.
And I can't even tell you like how many times I was just having, this conversation with my husband, where he's seen like in my business, like there's been we've had different launches throughout for the last like 7 years, 8 years. And there's always something like there's a war, there's a cultural, upheaval, there's an election, there's like COVID, like there's always something. It's so funny because I'm like, how is it that every time and we do a big launch, and we typically only do a big launch like 1 or 2 times a year, there's like some pivotal worldwide like epidemic catastrophe happening at the very same time. And he's like, yeah, every time it's like, he's like, that happens. And then you do great. Like everything works out great. And like, it's par for the course. Like that's just part of running a business while the world is doing what it's doing. You know what I mean? Like
so true.
You can't be like, oh, well, there's this circumstance. Oh, and then there's this circumstance. Like that, any circumstance, you can make up any circumstance that would stop you, big or small. Right?
So true. Yes.
But there will be circumstances forever. Like,
exactly.
And a business doesn't care. Like if you look at the business alone as its own entity and not make it like personal, like the business doesn't care and or know that there are all these circumstances happening in the world.
That's so true. And there's businesses out there that are doing it. Like there are businesses out there that are getting through it. And so you can be that business as well. Like you have the ability to do that.
Absolutely.
So it's such good advice. The only thing I would probably preface that with is it's keep going, but it's also keep pushing and keep trying. It's not just like keep the status quo and, you know, eventually it's just, I'm going to sit back and eventually this is going to work. No, it's like, okay, this thing didn't work. Let's try this thing. Let's try this thing. And that's why, to your point, you said you can't do it unless you really want to do it, because if you don't really want to do it, then you're not going to be trying the next thing and the next thing and the next thing. You need to have that ambition and that motivation and that real desire to keep going and
to keep
pivot and to change. Yeah, exactly. And that's where businesses see, sorry.
No, go ahead.
That's where businesses see those transformational growth, when they've tried things and it doesn't work. And then they hear something and they think, oh, I'm going to do this. And then suddenly it takes off. It's like, oh, it just took you one product and you did it. No, it took me 20 products that didn't work out. And then finding the thing or the marketing twist or the unique product that did work out.
Absolutely. And it kind of lends itself to the idea of being adaptable and being really flexible and malleable and being willing to pivot. And there's this quote, and I don't remember what it is, but it's something along the lines of malleable brains make for happier people. Like people who are adaptable make for happier, more optimistic, more positive people, because they just adapt to any circumstances. They're not rigid and stuck in this happened, therefore I must feel this way and I can't adapt to the circumstance. And it's the same way with business, where it's like, it's kind of being able to ebb with the business. And I don't know if you find this to be the case, but I found that once I became a mother and a parent, being a business owner before being a parent and after being a parent is such a blessing, because before you can really structure your day however you like. And you can have structure and you can have your rigidity and you can have your schedules and all this stuff. No matter how much you try to put a baby on a schedule, that schedule, I don't care what you say, is going out the window. I know with my first kid, I was on, I was so devoted to the schedule, to the rhythms, to making sure we were following the schedule. By the second kid, I was like, that went out the window. And actually it ended up being way better, way easier to just learn to lean into and be adaptable and lean into now we're doing this. Now we need to stop doing this. Now we need to start doing this. Now we need to pivot. And that's okay.
That's so true. Yeah, I think that's a really incredible observation, just having that adaptability mindset and how you can transform not just the business aspect of your life, but all aspects of your life, and how we're not going to be the same people in even a month, let alone a year. So being able to constantly adapt personally is how the business is also going to have to learn to do that as well. That's really interesting.
People don't like
I love that.
Some people will not like that. But it's so much of part of being in business and having a business, but definitely not easy.
Exactly. Right? Yes. Yeah. But that's part of the fun as well. Part of the challenge is never doing the same thing and just having to constantly do a million different tasks that just pop up because there's a new technology advancement or a new trend or whatever.
Yeah. And that's when you're in for the adventure, you'll enjoy the adventure. When there's an adventure, it's a journey and it's an adventure, then you'll enjoy the adventure.
I love that. Oh, it's so inspiring. I love it.
I love this conversation, Anthea. Thank you so much for coming on here today. And I always love chatting numbers with you. And it ended up being a mindset / abundance conversation, but I think that's what money is in the end.
It did, yeah. It took us somewhere differently, and it is. I mean, money conversations can go anywhere, so it's important to focus on not just the numbers, but how we approach it and how we can adapt to it and how we can kind of see it flow through our businesses and our lives.
Yes, absolutely. Well, thank you. Thanks for coming on here and having this conversation with me. Thanks everyone for listening. Go and check out the recommendations that we shared. And if you like this episode, I would so appreciate if you can follow us, subscribe, leave us a review. Every single review matters and counts. So thank you so much. And I'll see you all in the next episode. Bye.